Hello, welcome back. Let's now have a look at an illustration involving a payables ledger control account reconciliation. So, what we've got then is we've got the balance brought down on the payables ledger control account, and that balance is 52,590. Okay, so in terms of the T account, okay, the where we've put all our debits and credits that is sitting in the nominal ledger, and we'll go in the trial balance and the accounts. Okay, that is going to 52,590. Now, if we then look at the balances that are sat within the payables ledger, so that list of individual supplier accounts, and we get the following, okay? So we've got Uganda, Rwanda, Botswana, Namibia, Lesotho, okay? And so, right, they are the individual amounts, okay, that they all own. Now, if I total that little lot up, that comes to £50,044. Okay, now the whole point is I am expecting those two numbers, okay, so that 52,590 and that 50,044, they should be the same figure, yeah, because fundamentally the total amount I owe the suppliers should agree to, if I look at and add up the balance I owe each supplier, they should be the same number. They're not, so that's where the reconciliation part kicks in, okay? So part A is, reconcile the balances shown above with the payables ledger control account balance, okay, and work out any difference. Well, yeah, you've pretty much done it there. You can see just picking that up and rolling that forward, okay, is so right. Well, the payables ledger control account balance is the one we were given in the question of the 52,590. The total of the actual payable ledger accounts is what we've just added up there as the 50,044. So we are left with a difference then of 2,546. Okay, so that's what we've got first. We'll just work out the difference. That's the straightforward bit. The more fiddly bit is what then happens in part B, because part A, fine, work out the difference. Yeah, you can see there. You can see where we've got all the figures from. It's quite straightforward. Part B, though, tick below the item that may have caused the difference that you have calculated in Part A. Right. So what I'm looking for is I now need to find a difference meaning that the amount on the payables ledger control account is too high, or that the amount that is sitting in that list of balances is too low. Okay, so it's got to be one or the other. And so it's a case of running through that list one by one and thinking, okay, would that difference mean that the payables ledger control account balance is too high? In which case, yes, it would work. Would it mean that the list of individual supplier balances is too low? In which case, yes, it would work. But obviously, if it's the other way around, then the answer is no, it won't work. Okay, so let's have a look at what we've got and what we've been given here. So, first of all, discounts received may have been omitted from the payables ledger. Okay, well, a discount received, okay, if I receive a discount, that would reduce my payables balance. Okay, the whole point about receiving a discount is it means you now can pay less to your supplier, so it reduces your payable. Now they're saying, look, there are these discounts received, and we've omitted them, i.e., we've not included them within the payables ledger. Okay, in which case, what that would mean is that the payables ledger balances are currently too high and they need to be made lower because of this extra discount. Would that work? Well, the answer is no, because already the payables ledger balance is low. Okay, if there are a load of discounts to apply to that 50,044, it's going to get even smaller, so it would make this difference bigger. Okay, it's not going to explain why we currently have that difference. Okay, so it cannot be that. That would make the difference worse. Okay, it wouldn't solve the difference. And so then the next explanation they give us is that purchase invoices may have been put in the or entered in the payables ledger twice. Well, look, if you've got a purchase invoice, what's that going to do? As I get a load of purchase invoices, they increase my payables, okay? Because fundamentally, I receive a purchase invoice. That's what I now need to go and pay at some point in the future. So as I get that invoice, that increases what I owe the suppliers, okay, and increases the payables balance. Now, they're saying it's been entered in the payables ledger twice. In other words, that list of balances will be too high because there are some invoices that have been recorded down twice. Well, looking at the difference, that's not the case. You know, the payables ledger balances is 50044. That balance is too low at the moment. So it can't be that there's a load of invoices included in there twice. Because again, if that were true and I stripped them out, that 50044 is going to get smaller. Okay, not bigger. So again, that cannot be the answer. Okay, that would make it worse, not better. And so then, goods returned may have been entered into the payables ledger control account twice. Well, remember, if it's goods returned, goods returned would reduce payables, okay? Because if I return some goods and send them back to the supplier, I don't have to pay for those goods, okay? So therefore, it will reduce what we owe the supplier and it will reduce the payables balance. Now, they've suggested that they could be in the payables ledger control account balance twice. So in other words, we've reduced the payables ledger control account balance down once because we posted some credit notes, and then we've accidentally gone and done it again. So what I'd be expecting to see now is that payables ledger control account balance is far too low because it's effectively been reduced down twice. Okay, yeah, we've debited that balance twice. Well, that's not the scenario here, okay? At the moment, the payables ledger control account balance, that 52,590, is bigger. So if there was like double credit notes in there, and I then stripped out a load of the credit notes that we posted twice, that 52,590, that number's going to increase. So again, it's going to make this difference bigger, not smaller, so it cannot be that one. Now, obviously, I know we did have to tick in the box for the last one, but let's just check our logic here, make sure it is actually correct. Because they've said goods returned may have been omitted from the payables ledger control account. Well, as we just said, goods returned would reduce down payables, okay? Now, if they're saying they've been omitted, in other words, there's a whole bunch of debit transactions that should be applied to this payables ledger control account, okay? And so if we haven't done that, what it means is there's a big debit balance to apply, that 52,590, to make that 52,590 smaller. Okay, and that's exactly what I'm looking for. I'm looking for something that meant at the moment the payables ledger control account balance could be too high. And if I haven't put through a load of credit notes to reduce down that payables ledger control account balance, it would be too high. So therefore, that's the only one that can explain it. Hence the fact that the tick is in that box, and correctly so, it should be in that box. Okay, so again, when you get questions like this, that's the logic. That's what you've just got to think about and try and think through, is identify, right, what at the moment is too high or too low, and then just think through each item and going, right, would it affect payables ledger list of balances or the control account? And if we did put it through, what would that mean? Okay, would we be looking to increase or reduce the balance there? And so therefore, basically, is it making that difference? You know, would it solve the difference, okay, make it better, or would it actually make it worse? That's what we're looking for. Hello, welcome back. Let's now have a look at a lecture example where we go through a payables ledger control account reconciliation. Now, this is one of these areas where, you know, we've seen a receivables one, there's an illustration payables ones you might have seen. So if you're happy and confident, by all means, have a go at this, okay, yourself, if you'd like to. If not, then obviously you can run through what I'm about to look at now. So, what we've got here then is starting off by telling me that the balance brought down on the payables ledger control account 8765. Okay, so remember that is our T account, that's our general ledger account where all our debits and credits are. That's the total we owe all the suppliers. We just don't know who we owe, it's just that's the total. Now, what they then do is give us the list of credit balances from the payables ledger. So this tells me who I owe. So we've got Waltz, we've got Foxtrot, Salsa, Jive, and Samba here, and the amounts we owe them. Now, if we add that little lot up, okay, if I look at what we owe each individual supplier and total that, I get the 8955. That's what it looks like I owe all the suppliers individually. Problem is now that that number and that number do not agree, and they should do, okay? So in terms of me doing part A and reconciling the balances, well, that's basically what we've just done, in that the amount per the payables ledger control account balance even, that's the figure we just highlighted in yellow there, and that is the 8765. If I look at the control account in the nominal ledger, it just tells me, yep, in total, you owe your suppliers 8765. If I then look at the actual payable ledger accounts and look at each individual supplier and total that lot up, okay, then that comes to 8955. They don't agree, obviously, so we now have a difference of £190, which we've got to solve and try and sort out what that is. Okay? So, that bit, not too bad, hopefully. Second bit is always the most awkward part if you get a question like this come up, and you could easily get something like this come up in the assessment. Tick below the item that may have caused the difference. Okay, so remember, what we're looking at here, we are looking at some form of difference meaning that either the list of payables ledger control account balances is now too low, or that the list of the individual supplier accounts is too high. So it's either our debits and credits and that total balance is too low, okay, and we've done a debit and a credit, something's gone wrong, okay, and it's too low, or we're looking for the list of individual balances, okay, to be too high. So let's run through these things. First one I've got here, discounts received may have been omitted from the payables ledger control account. So remember, what does a discount received do? Well, if I've got a discount received, I'd be expecting that to reduce my payables, okay? Because if I receive a discount, I don't need to pay as much money out because we've got a discount on it. So we reduce down our payables balance. So if we've omitted that from the payables ledger control account, it's like, right, we've got an extra entry we need to put through that should reduce down our payables ledger control account balance, okay? Well, the problem is the payables ledger control account balance is already lower, okay? If there is then extra discounts to put through there, it's going to make that 8765 even lower, meaning the difference is getting bigger. We're not finding the difference, okay? So it's not going to be that first one, okay? That would not explain it, right? Now, look, in the assessment, you'll only need to put your tick in the box next to which one it is. It's just, for me, it's a bit easier if I can just put my ticks and crosses in so we can show you which it is and which it isn't. So what we then have is purchase invoices, okay? So if I'm thinking purchase invoices, okay, well, as we get purchase invoices, they increase our payables. That's the main driver of what increases the payables balance, is we get more goods on credit, goods get delivered to us, we get a purchase invoice for it, but we haven't paid for them yet, okay? So therefore, our payables balance, our liability goes up because of those purchase invoices. Now, they're suggesting that they may have been entered into the payables ledger twice. Well, if you do that, what that means is that list of balances will be too high, because not only have you recorded down all the you've not just recorded down the purchase invoice as you should have done, you've then done it again, meaning that you've got too much sat in there as being owed to suppliers. Okay, so that's the sort of thing that would make the total of all the individual ledger accounts too high. Does that fit what we've got? Yes, it does. Okay, because at the moment that 8955 is bigger. So if we had put some invoices in there twice, then yes, the list of balances in that 8955 could easily be too high by 190 quid. So that's looking good. Now we will just go through and look at the next two. I know that we found the right answer, okay, but just so we can think this through properly and we can explain the whole thing, okay, then we will look at the next two, okay, at this point. So goods returned. Well, remember, if you start to get goods returned would reduce your payable. Okay, yeah, so goods returned is going to reduce the payables figure. Because if you send the goods back to the supplier, you don't need to pay for them anymore, so you can reduce your payables balance. Now, first of all, they've suggested they may have been entered into the payables ledger twice, okay? Well, if I'm going to do it and I'm going to reduce down that payables balance, if I've put it in the individual list of balances twice, okay, I've reduced them down too far. So I would be expecting that the list of payables ledger balances would be too low. But that's not what we're seeing. Okay, we can clearly see that 8955 is higher. So if we'd have made that mistake and put some goods returned twice, we would now need to increase that 8955 number, not reduce it. So that would make the difference worse, not better. So it can't be that one. And then we'd also got goods returned, which we've just said reduces payables, may have been omitted from the payables ledger control account. So if we have not put through those goods returned, we would be expecting to do a double entry whereby we would debit our payables ledger control account, okay, i.e. make the payables balance smaller. Problem is the 8765 is already lower. So if I've now got a bunch of credit notes to stick through there as well, I'm going to make that 8765 number even smaller, okay, not bigger. It's going to make it smaller, in which case I'd make the difference worse and not better. So it can't be that one either, okay? So it's the sort of thing, yes, here I knew once we got to that second one we had found the answer, but just run through the whole thing just to check our logic, and yes, we're absolutely certain the other three don't make sense. They would all make that difference bigger, okay? The second one is the only one that can make the difference smaller. Okay? And then finally, it just asks us and sort of says to us, look, it's important to reconcile the payables ledger control account on a regular basis. Which statement is true? So first of all, reconciliation of the payables ledger control account assures managers the amounts outstanding from customers is correct, okay? And so just check with things like this, the wording of stuff like this very carefully, okay? Because we have a problem here, and the problem is that, okay? Customers, remember, this is your payables ledger, okay? This is nothing to do with your customers. The amount your customers owe you is your receivables ledger, okay? And your receivables ledger control account. So the terms just don't work there, okay? I'm not, looking at payables ledger control account is me dealing with my suppliers, not my customers, okay? So that first one there, that makes no sense as an explanation. Secondly, reconciliation of the payables ledger control account assures manager that the amount outstanding to suppliers is correct. Yes, that's sensible. Okay, yeah, that's a good reason to do it. Is it just make sure that we are happy that we've not made any mistakes or errors, okay, because we've got stuff being recorded in a couple of places so we can check the balances to each other, okay? So yeah, that's good, that works. The third one. Reconciliation of the payables ledger control account will show if a sales invoice has been omitted from the payables ledger. Well, again, the massive problem there is the fact they're talking about a sales invoice, okay? This is nothing to do with sales invoices, okay? Because sales invoices go to your customers, and they're what we deal with receivables and receivables control accounts, okay? Here, because this is payables, we're dealing with purchase invoices, not sales invoices, okay? So again, the terms in that statement just don't work. And then finally, we get reconciliation of the payables ledger control account will show if a purchase invoice has been omitted from the receivables ledger. And again, the problem we've got there is they now start referring to a receivables ledger, because obviously your receivables ledger relates to your sales invoices and relates to your customers. It does not relate to purchase invoices. It does not relate to payables. Okay, so yet again, just the terms they're throwing into that statement do not make sense and do not stack up. Okay. So on that basis, only the second statement there is accurate and actually makes sense. Hello, welcome back to this bit on control accounts, and we're now just looking here at a little section just involving digital bookkeeping systems, i.e. basically computerized accounting is, I suppose, digital bookkeeping systems. Okay, sort of the fact that you're doing it on a computer. Now, I have sort of mentioned this a few